Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading. I sent out a request for videos you guys would like to see in terms of aiding your education at Rich Dad as you're going through this system and as you're going through Master Trader as well. And I'm going to record a few videos here this week to make sure that we do exactly what you guys need, because we're part of this system and part of this team and so on and so forth. One of those videos was about indicators, and the first indicator we're going to look at is the MACD, the Moving Average Convergence Divergence. Now, MACD, every indicator uses historical data to determine where the indicator lies. That historical data is what we call a lagging indicator, meaning it uses historical price action to determine the future expectation. Well, if I'm looking at this chart here on BMS, this is what we call higher high, higher low, or motive wave, corrective wave. One of the things that I really like about MACD is it can help us understand when something is beginning to turn around. So it's helping us determine where it's going to move on to in the next movement. And so as you can see, it's coming down, 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 down. Where am I going to buy here? Well, I want to buy at old support, old resistance, new support. I want to buy off a Fibonacci retracement or whatever. So when I'm looking at the Fibonacci retracement here, I drag that up. That's right at a 50% retracement level. That's a good buying opportunity on BMS. Looking for an upward movement in price. We started getting it today. Confirmation more than likely tomorrow on the price action. Well, one of the things that MACD can do is help us determine if this is a really good opportunity to confirm those decisions. So what you're seeing on MACD is you have these two lines. Okay, one is percentage K, one is percentage D. One is faster, one is slower. Think about them as moving averages to a certain extent. The blue line here, that's the faster moving average. The yellow line here, that's the slower moving average. When these moving averages hook and then cross, that is a buy signal. So right here you have the faster moving average come down, 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 and as you can see, the price of the stock is also coming down, 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 down. Well, as the momentum increases to the downside, you're going to see this blue line start to separate from the yellow line there. What you'll also see is a visual representation of that difference in terms of the expanding difference on what we call the histogram. The histogram is my red and green bars. And so as you see it start to expand, you have the histogram here start to expand to the downside. Now, when is this going to hook, giving me my first signal or my first confirmation, and when is it going to cross, giving me my second confirmation? So the hook is like the aggressive confirmation. The cross is the second. So here's your hook. That's aggressive. Here's your confirmation. Hook aggressive, cross is conservative. So if you looked at the hook goes right into this range, starts moving back up. The cross then happens right here, and it continues to drive back up. So we're starting to see slowing momentum on your candlesticks, but look at the histogram here. It's going down, 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 and now it's starting to level off, signifying that this little blue line here is going to start to hook and go back up. Once it starts going back up, the histogram is going to come back up as well, and then once it crosses the zero barrier, this blue line will cross the yellow line. So it's helpful to MACD is helpful to in understanding the hook and the cross in a given situation. Let's pull up another one here. Here's Ash, and let's look at just a little bit of data here. Here's your hook, there's your cross. Here's your hook, there's your cross, here's your hook right into this range. Look at the histogram coming down, and then it crosses, and look what happens to the price. Now it comes down, 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 and lo and behold, we got a hook, upward movement in price on the price on Ash. That's a buying opportunity if you want to be aggressive. If you want to be conservative, you wait for it to cross the zero barrier, and that's where you get it. So you're giving up a little bit of your gains by being aggressive, but at the same time, by being conservative. conservative, but you have a higher probability of success. I personally like, using a combination factor. So at this level, old resistance, a new support level over there, I know I want to buy. I get the hook on MACD. That's confirmation for me, and that's good enough for me to get out there and make a trade on that. You can do the same thing at target points as well. As they go up, 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 they're going to get overextended. Once they slow on the momentum on the top side, such as up here, they hook and then start going back down. That's a sell signal. Hope you enjoyed the indicator discussion on MACD. This is Matt Justice for Tackle Trading. Check us over there at www.tackletrading.com to get the Forex report, the option report, the upcoming commodities report, the stock report that's going to be coming out next week, as well as everything else we do in terms of videos, blog posts, the clubhouse, the trade center. It is a one-stop shop for you guys who are looking to find a trusted source, somebody you can trust in terms of the analysis, the technicals, the fundamentals, the market. We have nothing out there to gain outside just helping you control your financial future and doing this the right way. So check us over there at www.tackletrading.com.